The Nifty is up 113 points right now and counting.
Currently, as we speak, it's 130 points higher in the Nifty.
The day's high is a little above 17,431, 430 or so actually. And it's actually quite a bit of come off that we've seen. Just a 50-odd point gain, and the Nifty ending at the day's lowest point.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track around 6 hours of the day's trading action in just 5 headlines. I'm Nigel D'Souza. Let's get straight to the headlines for the day. Bulls continue to reclaim lost ground on Dalal Street. The sensex and the Nifty again for a second straight session, but profit-taking late in the session wipes out some part of the gains. The rupee weakens against the dollar as it moves closer to around the 82 mark. The Zee Entertainment stock gains after the Competition Commission gives an assent to its modified merger proposal with Sony. Experts say that the deal offers significant synergies and stock value. Record Class 8 truck orders in the US in September propels Bharat Forge, while enhancement of unsecured credit support under the Emergency Credit Line Guarantee Scheme fires up financially stressed SpiceJet. Godrej Consumer slips on low growth and weak margin concerns, while strong business momentum powers up RBL Bank and Poonawalla FinCorp, but AU Small Finance falls better than expected strong momentum. Crude oil prices rise for the fourth straight session after OPEC nations agree to slash output by 2 million barrels per day, the largest reduction since 2020. Brent crude prices are at its highest levels in nearly around a month. Well, here's a lineup of what we have in store for you during the show. We'll bring you some market opinion from Gautam Trivedi of Nepean Capital. And in more expert voices, well, we'll get you what Mark Matthews of Bank Julius Baer and company had to say. Well, the bulls continue to reclaim lost ground on Dalal Street. The sensex and the Nifty, well, they gained for the second straight session, but there was some profit taking that we saw late in the trading session. Prashant Nair joins us to run us through the day's action. Prashant?
All in all, it was a bit of a disappointing day for bulls, especially on the index, large cap Nifty index, which gave up most of its gains and ended with about a 40-50-odd point gain. And I think the culprit was the Nifty Bank. Banks have been the strongest part of the market, and there was a bit of a loss of momentum there. That index ending about just under 0.5% as well. Sectors like metals, IT and real estate, these are laggards, relative laggards. IT, of course, the clear big one, they did well. Now, a few stocks on the large cap space, metals first, JSW Steel, Tata Steel, Coal India, these are names which did very well. IT will be the first of the block in terms of reporting, and it remains the one large market grouping which has seen absolutely no bounce. So for the second day running, HCL Tech, Infosys, Wipro, etc. participating. Overall market breadth was pretty strong, 2:1 in terms of advances to declines, and up with volumes, mind you. So Mazgaon Dock continues to rally hard. You had India Cements, Bharat Forge on the back of news flow, Persistent Systems, there was an upgrade. JSW Energy rate gain in the last hour of trade saw a pretty large block deal. Motherson Sumi, HEG, Nazara, Gokuldas Exports was up 9%, almost back at 400, and Everest Industries. And there were more. I'm limiting myself here. Markets from here. I mean, first is the level to watch. 17,421 is around where the market turned south from. That is a 50% retracement of the fall from the 15th of September to the 30th of September. So when we come back, that will be the initial level to take out. US market follow-through is important. Yesterday, you had the US markets reversing from, being down 2% to closing absolutely flat. Will we see that follow-through higher? And oil remains critical for India. It's up almost $10 from last week's low. And the way things are lining up, we could have a bit of a breakout as far as oil prices go. Back to you.
Thanks a lot for that, Prashant. Well, let's get you some market opinion. Gautam Trivedi, co-founder and managing partner at Nepean Capital, said that India is seeing some degree of FI inflows into the market, which is positive. He added that IT stocks may not be a good bet at the moment. Let's hear him out.
I think downside is certainly left in this market. I tell you where I'm coming from. Again, in spite of all the stuff that we've seen, and of course, you've seen some degree of FIs coming back into the market, which was a positive briefly. Again, Last month, they sold almost $1 billion. So will India end up decoupling? I don't think so. What we see is the other concern, of course, is in terms of valuation. And again, I've said this before, India has, of course, always been one of the most expensive markets among the emerging markets and always the most expensive Asian market. But now we're at 20.3 times calendar 23 PE, which is more than double that of China's. MSCI China is now at 9.3 times. Anybody who's in the export side of the business, and again, as we know, two of our biggest markets for exports for India, and not just for IT, but even merchandise exports, are the United States, i.e. North America and the European Union. So as a result, both of those which are currently undergoing economic challenges, I think I'd stay away from anybody who's in the export side.
Well, in more opinion, Mark Matthews of Bank Julius Baer and Company said that if there is a recession, it will be a mild one. He added that India is their bet for the next 5 years, though in the near term, things are likely to be volatile. Let's hear him out.
Now the market is down around 20% so far this year. I think we are putting in a bottom. October historically is the month where major market bottoms occur more than any other month. And even if we get a recession, I think it'll be a mild one because the labor market is still so strong. There's still 1.7 jobs available for every one unemployed person looking for work. And so 20% decline in the S&P is really about what you usually see when you have mild recessions.
All right, so some cautious commentary coming in from Gautam, while Mark says clearly for the next few years, the Indian markets is something that he's betting on. Which brings us to the second headline now. Zee Entertainment. The stock gained over close 4% in trade after the Competition Commission of India gave the green signal to its modified merger proposal with Sony. Bahista joins us to fill us in with a quick analysis on that front. Bahista?
On the 4th of October, Zee and Sony had finally received the much-awaited approval for their merger from the Competition Commission of India, or CCI as we know it. This brings a major sigh of relief as the CCI approval is usually the primary hurdle and takes a little longer. However, the approval comes with certain conditions to be fulfilled by both Zee and Sony. Prior to receiving a CCI nod, concerns were cited towards the merged entity's market dominance in TV viewership, high fee from advertising, and on the channel pricing. Both Zee and Sony had made some voluntary submissions to the competition watchdog, which could include the closure of some channels. And post receiving a satisfactory revert from Zee and Sony, the Competition Commission of India gave a go-ahead. Now let's see how the merged entity would look like. In terms of TV viewership share, Zee and Sony will have 26%, which is to be compared with Disney and Star viewership of about 20%. In terms of digital market though, the Zee-Sony combined entity have an advertising revenue market share of about 6% and subscription revenue market share of 18%, which is anyways lower than Disney and Star of 18% and 25% respectively. Zee's current shareholding pattern has a promoter group stake of 4%, while the remaining is publicly held. However, post-merger, Sony is expected to hold a majority stake of about 51%, while Zee promoters continue with a little less than 4%. And other shareholders, including Oppenheimer, will hold 45%. Mr. Puneet Goenka from Zee will be the MD and CEO, while majority of the board of directors of the combined company will be nominated by the Sony Group. And the new entity will now have a quite complementary TV network, 2 OTT platforms, which is ZEE5 and Sony Live, 2 film studios, and a vast library of programs. In terms of the existing OTT platform offerings that both companies have, the total subscriber base for ZEE5 plus Sony would stand at 21 million, next only to Disney Hotstar. Notably, the merged entity will have a total cash balance of $1.5 billion and the ability to gain from synergies in advertising and distribution and cost savings on content, employees, and marketing. While there are some approvals which are still pending from the shareholders, income tax, Ministry of Information and Broadcasting, and ROC, the analyst community don't see these as big hurdles and find the current valuation of 15 times FY24 expected earnings as attractive.
Thanks a lot for that, Vahista. Well, the third headline today, stocks like Ramkrishna Forgings, Bharat Forge, as well as Samadar Motherson rallied closer on 2 to around 8% after the North American Class 8 truck orders hit record highs in September. Sonia Shonai is standing by to run us through all those details. Sonia?
Well, thanks a lot for that. The US Class 8 truck order data was exceptionally good in the month of September. Class 8 truck orders hit record highs of 56,500, which is a growth of 102% year-on-year and 164% on a month-on-month basis. Now, the Class 8 truck segment comprises of both trucks and tractors with and without sleeper cabs, and a lot of companies have an exposure to that market. So, Bharat Forge, for example, gets 22% of its standalone revenues from the North American truck market. Ramkrishna Forging gets 23% of their revenues from the North America business, within which they supply to the Class 5 truck market. And then you have GNA Axles that gets about 30 to 35% of their revenues from the North American truck market, while Samvardhan Motherson gets 7 to 8%. Most of these stocks were up and about. If you look at the trajectory over the past many months, on an average, Class 8 truck orders were in the range of 15 to 20,000. It's only in the month of September that there was a big bump up. ACT Research, which is the the research arm that puts together this data, indicated that generally May to September is a lean season. So most of the order booking happens post that. But this time around, there was a preponement of the order booking because of how strong the demand was. And they said, in their own words, whichever way you slice the data for Class 8 truck orders is looking pretty sensational. So most of these stocks were big gainers in trade today.
Well, Sonia, thanks for that. But stay with us. SpiceJet as well ended higher with a gain of closer on 7 to around 8% in the green on the back of the enhancement of unsecured credit support under the Emergency Credit Line Guarantee Scheme. Now, take us through details on that front.
Well, SpiceJet was the big mover in trade today after the government decided to enhance the limit, the credit limit for the aviation sector under the ECLGS scheme. Now, the loan limit for the aviation sector has been raised to 1,500 crores from 400 crores earlier, and this is in order to give collateral-free liquidity at reasonable interest rates to the aviation companies to help them tide over their cash flow problems. Now, the biggest beneficiary of this will be SpiceJet. Sources to CNBC-TV18 have said that SpiceJet will get 1,000 crores of an enhanced limit to help it tide over its cash crunch. Remember, SpiceJet needs funds, that is the need of the hour, and fund infusion and a recapitalization plan has not been put in place just yet. In fact, if you look at the last 4 years, it was only in FY18 that SpiceJet posted a profit. Since then, it's been steep losses for SpiceJet, all the way up to a loss of 1,700 crores in FY22. Indigo is a different story altogether. Credit Suisse, in fact, put out a note on Indigo where they have an outperform rating with a target of 2350. They said that the peaking of crude and currency risks may now let other merits to surface, and travel has also picked up. So big moves coming in on both these names.
Got that, Sonia. Thanks for that. Well, time to slip into a short break, but you stay with us. We'll be back in a jiffy with the other headlines that we're tracking for you.